Wizards. Welcome to episode 16 of the Crypto Wizard Wednesdays. Now, having a look at the market right now, how crazy is it to think that we are nearing all-time highs by 2019? Even, to be honest with you, as shocked as I am, it is actually pretty exciting to see. So, we have to cover this lesson in many different ways. We have to start looking at the market. We have to start looking at the market more realistically now because we are nearing all-time highs. And the biggest question now is we have to look at the market in terms of how many corrections have we seen? How many pullbacks have we seen? How are we looking in terms of liquidity? How is the fundamental news looking? What is going on around the world? There's a lot of things that could potentially be pushing this market forward. But we do know as of now, the majority of this is simply USDT. So looking at the BTC dominance, it's taken a massive increase from the prior Wizard Wednesdays, the prior Crypto Wizard podcast. We were sitting around 57% all week, now exceeding and breaking through that 61% barrier and nearing 62% at its current price right now. The market cap has jumped almost an extra 70 billion in a single week. And to be honest with you, looking at the statistics, looking at the kind of liquidity and looking at the short positions, especially coming from the much larger traders, I'm looking at the likes of CME futures, I'm looking at the likes of institutional short positions, which I did post on Twitter, you would see they're actually far exceeding the long positions. So it's very interesting to see that even the hedge funds and the main entities controlling the market in terms of the CME futures, they have the biggest dominance on this market thus far, except USDT. It's incredible to see that if we go to the markets over here, every single, although not every exchange does offer fiat pairing, when you consider how many hundreds of millions of USDT are being printed consecutively over the couple of weeks that we've seen, and even over the past few days, we saw an extra 100 million get issued as well, all out of thin air, all completely magical. So, although realistically the majority of these exchanges do not offer very strong fiat pairings or very liquid alternatives to trade with fiat pairings, the USDT dominance is now more present than ever, and we are looking at a huge influx over here of USDT dominance, and it's pretty crazy to see how much of a dominance it actually has right now in the market. Because when you're looking at institutional short positions, you're looking at CME futures, for those huge positions to not even be tackled by USDT, we must be seeing a large amount of money flooding into the market. So there's a big misconception right now that the institutions are pumping this, and to be honest with you, they are far from pumping this, because we would already been exceeding all-time highs if this was an institutional movement. So by all means, I'm not saying this is fake or false, but it's not too sustainable for the time being. So if you actually remember, I believe it was a year ago now, for those of you who have been following me for quite a while, I actually expected and predicted the bull run to happen around May 2020, just before the halving actually began. So I thought we were going to start breaking all-time highs around that region. And to be honest with you, for the time being, I'm still sticking to that specific bias. So looking at this now, $13,000, lovely. I've actually stripped clean a lot of this stuff over here, so we can start analyzing this market a bit more securely, start projecting even more upside targets here, although I'm still very cautious, again, taking this with a pinch of salt. At least looking at 10,000 to be retested at some point. Crucial region, we'll get into that in a second as well. But the overall basis of this breakdown is to remain level-headed. Again, we are not here to care for other people's opinions, what they say, what they think, because everyone's excited right now. They're going crazy. And as much as we are going to enjoy and start projecting further upside targets, as you know, I said very logically, the minute we break $11,600, price will disregard $12,000. As crucial as that level looked, many people were waiting for shorts around $12,000. I had a very strong feeling this level would not hold up, and again, I was betting on the shorts. The minute that level broke through, we knew what was coming next. And look at this right now. Even when Bitfinex went down for maintenance, allegedly maintenance, we are still resting at that $13,000 region. So looking at upside targets right now, what am I looking at here from when all-time highs are broken? So all we're going to do, mark off a very small region here, just to kind of notify where the prior all-time high wick was, and of course where the candle body closures were actually around $19,000. Not too crucial for now. I believe that will cause a significant reversal point anyway, and there will be some wicks around here. You have to remember, in terms of all-time highs, I still think that will be achieved and be broken by next year. For now, I'm still not too confident, because then I'm not really sure where that would be leading us for 2020. This year, doesn't seem to have enough real fundamental backing. I know we've got backed, I know we've got all of these futures that are being approved as well, we've got all kinds of stuff, and they're all interlinked with one another. But the truth is now, looking at these current prices, it just gives me more fear. You have to remember, 2017, before we had any of the institutions really jump on board, price drove all the way up with just purely speculative capital to all-time highs. As we start nearing all-time highs again, suddenly we start hearing and see alarm bells ringing that new futures will be implemented and going live soon in July, to be fair. So as we are currently on the 26th of June, as we start shifting into July, the futures will start taking place once again. So July could be a very interesting month, and as I've said, the first half of the year is looking phenomenally bullish. But as we start shifting to this final 6 months, even if we do not see a bear market reversal, and again, we'll get to these regions in a second as well. Huge untouched regions, many people have disregarded, even in this bull run here. When we saw the initial bull run and we looked at this level here, crucial level that broke out, $6,000 region, and it's been a key staple. And it hasn't been retested since breaking out. So that's a big region of caution for me. I'm always going to leave that there. I do not care what anyone says. A simple turnaround in the market could take us straight down to this region. So please leave this open for acceptance. And as I said, we'll get to these levels in a second as well. We'll start dragging these up to the likes of $16,500, which is where I believe price could be peaking for the remainder of 2019. Many people thought this is a random level. Why am I predicting this level of $16,500 in the absolute best case scenario for the end of the year? Now, even if we do hit all-time highs as well, you have to realize many people, and all of us especially, have been dollar cost averaging or holding. Imagine how many people are psychologically tormented from buying at the absolute highs. Moving up, by the way, now looking at that 13,500 region, we'll get to that in a second. What you have to think about is how many people bought at these highs, falling into the same trap we're now seeing. It's very hard in the moment, I assure you, to actually have any form of logic or sanity when viewing these charts. But if you've been dollar cost averaging from the beginning and you're well hedged in the market like I am, you would understand the reason I even call downside targets or possible corrections is because I know they're going to come at some point, and I know exactly where they are very likely going to strike. So it's not about trying to catch shorts in an overall upcoming bullish market. We've now jumped to $100 from 13,000, looking ripe to hit that level right there as well. It's more so being protected for the inevitable, because the market, I'm not sure where or how people cannot comprehend the possibilities of the market correcting. Even if it hits here and just flies higher, it's still a pullback, but it will save you a lot of money from FOMOing. And the whole point is you shouldn't have been buying from the all-time highs here anyway, because we've been buying from here and we've been buying from here. We've been dollar cost averaging all the way up, and predominantly my biggest focus was telling all of you to dollar cost average all the way down. And that's the main point. We've been buying at 3,000. We've been waiting potentially for 1,800. It never came through, but we were always dollar cost averaging to save ourselves from this measure. That's the beauty of margin trading. You can catch those intraday pullbacks to accumulate more BTC as your portfolio takes a slight hit. Long positions can still be running, and you can even hedge positions how I do. Whilst longs are running, you can catch intraday shorts. So this is a weekly perspective right now. And looking at this level here, the first level of interest for me is 13,500. I'm going to show you some very interesting things to notice very soon. So the first thing, I'm not just dragging this here because it lines up perfectly with $6,000. Bearing in mind, as I said, the shoulders, the head, the potential shoulders, all the way back pulling through. Now almost $150 up, BTC looking ripe for $13,500. Now, looking at this level, taking it into consideration, one of the most important factors I must assure you for, and I've tried to mention this before, when it comes to using the Fibonacci tool, it's not actually about looking at where it lines up with key levels, it's where its relevance are. These levels have to be relevant to prior price action. That means historical price data must align with Fibonacci levels to truly be valid. So let's just say, for example, we drag this up here, and it's just in the middle, in between here. It's got a bit of relevance, but it's not too interesting, around $19,000. It could make sense, but it's better to have those real correlations with prior price action. So looking at around 16.5, give or take, that's a kind of cool, safe number for me. Worst case, we can drag that up to 17, located just there. But looking at this now, almost $200 up. Bitcoin is crazy right now, and I'm absolutely loving it. And XRP, let's check that quickly as well. Still lagging behind. So we'll get to the altcoins in a second. XRP, we should be pulling back to around this region here, around 475 to 48, before potentially just pinging up and hopefully projecting and targeting these levels. So watch out for this region here. Currently wick fishing around these zones. I wouldn't be surprised if it just slams down to 0.475 and then pings off. We're still projecting the same upside targets. The only difference now is for XRP. Before I go back to BTC very quickly, we have the A, the B. This is a daily fib, by the way. We have an A, we have a B, we have a C at the 61.8. Very nice upside targets aligning with our broken trend lines. We've broken, we've retested once, retested again. We now know the validity of this level is an easy upside projection of around 53.4 cents. And of course on the upside around 56.5. But realistically, we'll see that push to around number of around 57 cents, my apologies. So putting all this into consideration right now, prior historical price action, it's almost 6,000 on the dot, historically one of the most crucial levels and one of the most well-held levels Bitcoin has ever seen. So taking that into consideration, what do we see over here? We see a huge key turning point around $8,600, 8,500 here on BTC, and prior price action as well has just been wicking all the way through this level. So major level for me, price actually halted here at one point, pulled back through, tapped it, broke through and rocketed again. So looking like some pretty good regions, and we're now $200 up. It's actually hilarious. It's amazing. I love this market so much. So looking at this level here, why this level in particular? Well, first of all, looking at where we are now, around 13,500 on a weekly perspective. If I drag it to the monthly, you can see here you've got around 13.8 to 14. So even on a monthly perspective, realistically, if you want to drag this a little bit higher in terms of extensions, you have the monthly closure here. If you are going to extend your Fibonacci, as this has now been invalidated, as you can see, realistically, you can look at that and think, okay, but if you want to drag this a little bit higher, here's where things get a little bit interesting too, because if you look at this current level, it's around 13,500. Let's drag that down to push it up to 1,400, exactly where the candle bodies are closing right there. Just above, you have $16,340, which doesn't really have much relevance. So let's just push this down to accommodate for this. And if you look at, notice that as I push this down, this aligns perfectly with prior all-time highs at the wick, and just above, we're at the 24,000 region. I literally just noticed this now. So going over to the weekly, what do we have over here? Let's now leave this in line here. Look at where this lines up exactly. This is one of the key regions, because many people have been like, that's such a random level, it makes no sense. But actually it makes perfect sense as a region of interest for myself. So looking at this level, if we draw a zone here, the first thing you will notice is one, huge wick through, another little tap there, huge reversal. This was one of the main turning points of the bear market. So that's why when it actually comes to a potential turning point in this market, you will see another huge candle like this. And then what you will see from one of those large candles is a simple retest. And here's how we're going to, when it does eventually come around, here is how we are going to start preempting and projecting the next move in the market. So when it comes to actually catching tops and bottoms, it's substantially harder. As you may have noticed, the price action, although it looks cleaner, is a lot harder to analyze in a bull market, because it does not defy any logical levels of technical analysis. Whilst it's fairly easy for me to understand key upside targets, that's why you're now seeing every single expert overnight come out of the woodworks, because price is going upwards. It's very easy to say price is going 14, 15, 16, 17 next. That's not skill, that's not technical analysis, and it holds no real, I guess you could say, fortitude in real life. It's just simply noobs jumping forward. Oh yeah, here. That's not skill to me, and it doesn't really show any form of talent. But when you're looking at these levels and you look at this potential turning point in the market, here's how we are going to spot when this market is about to trap us and potentially cause a huge mistake. During the prior run-up, again, this could simply be a much smaller version of what we're seeing now, causing a next pullback. So looking at this in theory, upside targets, we have a nice little run ahead of us if we do break this region. Although, looking now, let's just focus on this level first, because it's literally right above, and I had a feeling 1300 and 1200 wouldn't hold up anyway because of the significance of these levels. And as I said, once 11.6 broke, we just ripped through and had no courtesy for that level whatsoever. So the momentum is there, but as these shorts begin piling up as well, let's just remain focused on any traps. We are now in this bull market for it's been 6 months, so it's looking looking pretty phenomenal on what's going on over here, but I'm here to provide logic, I'm here to provide reasoning, and I'm here to let you know that there is a lot of upside potentially left, especially if we clear this level. There's also the same risks. I'm not changing my mind, I refuse to do so. Even if you start breaking all-time highs, the thing can always come back down and pull up. It's simply how it was. You have to remember, back in 2017, do you remember as we started pulling higher, all of the same people you see on crypto Twitter or wherever they may be voicing their opinions and projections, they were always saying this is the last time to buy four figures, get on board now. All these experts told you to buy at all-time highs, and it's not very sensible, because in the moment it's very hard to believe that price can do stupid things, even pulling down to here or here and here before progressing higher. It's a healthy movement in the market, and you cannot go 3 weeks of such bullish momentum, even though you saw it in the bull run. 1, 2, 3, 4, 5. Okay, so we have 5 weeks. Even if we went another 2 weeks up to this region here, realistically, the bull run has never really exceeded more than 5 weeks or so before inevitably pulling back. So we could even have 2 weeks ahead of us to really push and saturate profits out the market around that level. But I promise you, so many people, if we start getting trapped and we start seeing consolidation, that's when the real FOMO kicks in. Once you start breaching these levels and getting close to all-time highs, everyone will start thinking, oh my god, the bull run's coming again. They start buying, and then it could simply just slam. Even if it dropped now from 16,000 or 13,000 down to 10,000, 9,000, 8,000, people would literally have a heart attack because they would be absolutely wrecked, suffering almost 50% losses. It's very, very unwise to be doing that stuff. Dollar cost averaging was meant to have been done around these regions here. Here is where you can add a little bit more if you're here to hold for the long term, but for me, this isn't necessarily going to break all-time highs just yet, but what I'm so happy to see now is it's proven the market is not dead, and people need to realize this. It's proven now when the market wants to go, it will absolutely go, and it will not hold any courtesy for any people. Now, take this into consideration. Even if the market was to absolutely drop again, it would not be dead. It would not discourage anyone. That's why you have to not approach this with any bias, because we are doing this now without the real institutional adoption. The retail capital, if you check Google Trends, there is no retail interest right now. They are barely even touching the surface in terms of retail interest. This is purely USDT. The futures contracts are shorting more than longs. The institutions are not even bullish, and we are achieving such magnificent prices, but this is a USDT bubble. When this USDT bubble begins to pop, it will happen again in other forms of stablecoins or other alternative methods. The people controlling this market will not stop here, but you just need to know, you shouldn't be panicking if this market pulls back. You shouldn't be worried. We are simply opening up the ideology that it could happen, but we cannot focus on that yet until you start focusing on these upside levels, because we know now, and I'm so happy this has happened this year, because I know if this was to even drop to wherever it would be, crypto is not dead. Without the institutional capital, when they jump on board, guys, this is nothing. We'll be 30,000, 50,000, and do you know what? Realistically talking, $100,000 is very possible when you actually consider we are doing this all over again without the retail speculative capital. We are doing this without the institutions, the fidelity, all of these backs and all this stuff you're seeing in terms of futures. It provides liquidity to the market. And the best part about adding liquidity to the market is the market usually explodes in growth when the liquidity first arrives. But we have to remember, the institutions, they also short as well as long. They do not want to just buy. So just take into consideration the fact that we are doing this now without loads of liquidity. Can you imagine how high we will be in prices when liquidity arises? So let's just use this theoretical example now. We are now $300 away from our next upside target. We are moving swiftly in synchronization with the market. Here's why I'm actually quite favorable for the $16,500 pushing up to $17,000 movement. But this is the best part. I think once it starts hitting this region here, this is where I believe we'll mark this red for the sake of it, just as we've marked this region of red here. This could start trapping the market in a major zone. So we have this region here. Again, if broken, quick retest of around $1,400 or even $13,600, $13,500, and then boom, we'll start heading towards this level as well. So start paying attention, because my goodness, this is looking absolutely phenomenal. It is literally happening in real time, but it doesn't mean head and shoulders even on the monthly is still over here. So keep that in mind just for 1 second, but we are literally breaking through this region now. So here's why I think this could happen. I do believe many people will buy here. This is where you start buying because you're like, oh my god, all-time highs, oh my god, oh my god, oh my god, what do I do next? You buy. You FOMO in, you brush aside all logic, because who would have thought up here and here and here you would ever see $10,000 again? We broke through $10,000 and doubled. We made 100% ROI to $2,000. Me included, even I was tempted to start buying at all-time highs, because even I almost fell victim to the media, the news, the people on Twitter. People are going, so-called experts, even I believed them at one point, where they were just going 100k next, 100k next, 50k next. You had John McAfee, all these people going crazy. Buy. Guess what? It's only when those people started jumping on board and crypto Twitter started lighting up with excitement that the market soon came down. And you can use crypto Twitter as a gauge and a measurement of euphoria, because that is how you get stung. So in terms of trying to catch bottoms, we should not be trying to catch bottoms right now, but we now have two regions of interest, which are key turning points in the market, key points of interest, but also phenomenal upside targets to extend our profits. Guys, my goodness, even if we exceed and reverse from here, pull back to $10,000, we have hit $13,500, $14,000 in 2019. We've done the absolute unthinkable. And you can only imagine how many people realistically never thought this was possible. I didn't think this was possible. I literally thought, in all honesty, and I'm happy to admit this, I thought we were going to start nearing $9,000 to $10,000, pull back down to the likes of $3,000, and then blow through the roof by 2020, because I'm still sticking to my guns. The all-time highs will be broken in 2020. That's why I'm not too fussed about what is going on here, because I'm well hedged in the first place. But using this theory here, that's why I've drawn the Fibonacci here as well. The 78.6 from high to low, major key level as well. It's disregarded that, which means you can now extend your regions up to here. Look at the alignments, rejection, two candle body closures. This is a huge level. If this breaks, then my goodness, straight up $20,000. Pull back down to here and rocket ship above. Because remember, as price begins dipping into these very, very high substantial figures of $10,000, $15,000, $20,000, the pullbacks, they start coming through in very severe amounts. This fell from $19,000 down to $10,500 in a single week. And this is my biggest fear. Nobody is listening to me. Nobody's paying attention. Everyone's stuck in euphoria. My goodness, if you see a movement like that in one move, it's dropping you straight down in a single week. People do not realize it's very dangerous to be buying at the highs. You should have been well hedged in the first place. Look at this. If you literally hit, this is why I keep saying a key region of interest is around $8,400. Let's just drag this up a little bit more if you need to. Look at this level here, look at this level here. Even if you were to see the same movement, you're dropping down to $8,500 to $8,400. Conveniently also the Fibonacci around 8.2 here. It's very possible. Please do not disregard, please do not FOMO in. If you've missed your opportunity, then unfortunately, it's still wiser to be waiting for a pullback of some sort versus thinking you've missed out forever. That's what caused so many issues here. I'm not here to tell people to miss out and buy. By all means, if you're here for the long term like I am, this will be absolutely nothing in a matter of years or in a decade's time. But in the moment, just because it's here, do not believe it will never happen again. These huge green candles are meaningless. If you actually look at what is truly driving this market, you just have to be cautious, guys. There's nothing to really worry about. I mean, looking at this level here, 13.5, all that price action there. Closure. That's 1, 2, 3, 4, 5 candles closing in this region. Now, in this one scenario, let's drag this down to here instead. Let's just say it doesn't exceed that far. Look at what this aligns up with. You guys, you cannot make this up. First target aligns with 16,500, which I do believe is still possible for this year, and we'll get to that in a second. Where does the second target line up? They literally line up, I'm not even joking, on the exact same dollar, pretty much around these lines here. You cannot make that up. The alignment cannot be more beautiful. And as you can see, heading straight to this region, it's just a clear area of liquidity. And although we've reversed quite significantly from this level, I believe even if it was to hit here and you're trying to catch a reversal by any means, just be cautious, because let's just be honest, even if it does hit here, it may not be able to be caught, because it could be a very large single candle movement. I mean, this Goliath movement here, people are disregarding how much of a key trend we've broken. And that's why, on a weekly perspective, the higher it gets, as I keep saying, the bigger it will fall. It's not a joke. Let's do another test actually. We'll get that in a sec. But overall, look at these levels here, almost at this target, $13,500. I'm incredibly happy to see this now. So let me just drag this higher back to this level here. That means theoretically, and I'm more than happy to accept all of this over here, pushing up to this level here, this would push everyone to the brink of believing the breakout's coming. Guess what happens in a few weeks to even a single week? The futures kick in. Bang, they are shorting this straight back down, just as they did with CME futures. So we're not here to call bear market, we're not here to call turning points. We're here to provide logic and saturate the market and take profits every single step of the way. One of the key lessons I've actually made in the Crypto Wizard course is profit taking. Everyone's going, no, it's going to 20 next, there'll be no pullback until 20, 30, 40. Of course they're saying that because that's what they want to happen. The difference is the technical analysis is there to give you key levels. You're looking at these key levels of support and resistance, not to catch turning points, but to actually even sell a portion of your holdings physical. Literally, you see this level met here, take a very small portion. I do not care if you're holding all the way up to $100,000. Treat yourself. The going does not get good forever. And this is my point. I'm not here to be a party pooper. I'm not here to tell people to, sell everything and just try and catch a dip. You shouldn't be doing that. You should, even when we are looking at these downside targets of $3,000, $6,000, $1,800, you should still be accumulating on dollar cost averaging. You should never be trying to catch the dips where you're taking all of your holdings out here, waiting for a pullback here, because the market is volatile, it's uncertain. Nothing is guaranteed in this market. You're having to put probabilities and you're putting the odds in your favor via technical analysis. So when it hits this level, I literally mean sell 2 to 3% of your holdings. Take a bit of profit. Even if it's 50 or £100, take a bit of profit. Your goal here is to saturate the market and take your initial investment out. When you're dollar cost averaging and you're one of those people that bought all the way up here, you should have been averaging your buys down to lower your average buy. That way, when price starts exceeding this level all around here, in this crucial breakout region of $9,000 to $6,000, you're now in profit. Now you can start liquidating your initial investment amount. And then that way, you're now running risk-free in the market, and that is the goal. The goal is to buy as low as possible, as we've been dollar cost averaging and doing. When price rockets through the roof, guess what? You're now risk-free. You can take out your initial investment, and absolutely everything is profit from there onwards. So looking at this theoretically, here's an interesting point to note as well. Let's just clear these levels out for now. I'm hoping you're getting the gist of this level as well. So we just have to see if this level is going to be broken. I actually have a pretty strong feeling it will, and we'll hit this level here. But I do believe this will be a very key turning point in the market. So I'm as I said, from every single lesson, I do not care how high it goes. I'm not here to catch that reversal, but I am here to say I'm going to be one of the only people to openly state with confidence. And I don't care if it doesn't go down. I'm just throwing out that it can happen. And people need to be aware of that, because I won't want you guys losing money when everyone goes crazy trying to buy at the highs as we did last year, and then things look a little messy. So looking at these levels here, we have a good $3,000 push ahead before we can really start evaluating these all-time highs. I do believe even if this was to happen, we've got 2020 right out over here. If we look at the prior pullback of this market, let's just say from there, give or take. It doesn't have to be the full swing. Let's just say you drop from here and you copy the same movement. You're looking at $3,000. If you're looking at that same movement from around here, you're looking at a pullback of this level all the way back down from around December, November. Now, as I said, I do believe all-time highs will be broken December 2020. How do you know this isn't just a simple push, a pull, and then an absolute bro through the roof? So even though it can seem very close to all-time highs, my point was why I think there could be a very significant sell-off. Even if we do start hitting $20,000, I believe there'll be a very big pull-off first. We're now $200 away from our target, guys, looking very, very good on this 4-hour. This could just blow. To be honest with you, looking at this now, yeah, that looks pretty interesting. I think we're going straight to $16,500. So it's going to be interesting. I'm going to try and get this out as soon as possible. It's 10 to 6 p.m. here in the UK. So normally I do this at 8 p.m. But I'm pretty much here to cover BTC for this specific lesson and episode. Because my goodness, guys, this is like, I'm speechless. I'm genuinely speechless. I'm over the moon. I'm speechless. I can't explain in words what's going on. But I'm still level-headed. So let's just continue with this for now. Emotions are at an all-time high. It's a crazy, crazy period in the market. So looking at this now, all-time highs, the psychology of everyone that's been holding for almost 2 years now, it's crazy. People will be desperate to sell their holdings and they will panic sell around these regions. So of course, here's why the theory is, if we do near all-time highs, and people start nearing this region here around $19,000 to $20,000, panic sell zone, liquidity. Imagine how many sell orders are here at the ready from people that just want to get out. They've had enough. You have to remember, not everyone is here like us for the long term. And even you guys watching, I can tell by even some of the reactions when I say the market could pull back, the anger and the hatred and the maliciousness does show who is a short-term participant in the market and who is here for the longer-term, bigger picture. Because those of you who are here for the long term, like myself, it's not because I've missed a dip. This is a big misconception as well. I have to clear this air now because there's this very weird mentality from newcomers or people with not much experience that I have missed my opportunity to buy at $3,000. I've been buying from 2017. I've been buying pretty much since these days over here as well, when I used to use the dark web quite a lot. So that's how I got into crypto. Many people know that. I was using the dark web. Prices started going up on BTC and I thought, well, I'd rather just hold BTC versus using the dark web and wasting money. So here we are in the present day. I've been buying from a very early period in time, and that's why I've shown you a lot of holdings from back in the day. I showed you when I bought Ether during the initial period of the explosion around, I think it was like $6 to $14, give or take, around that level as well. I've shown you, I've been buying this market, I've been buying the dips, XRP in particular, all around these levels. I have not missed a dip. I'm just here to logically say it could fall down. It has no benefit to me. I'm making more than enough money on this rally to really care if it goes up or down. This is more than enough profit for me. I can express that gratitude, but I also know when to slowly drip feed profits because I know this can all happen and it will shock many people, but I have no agenda. I have no care for if it goes up or down. I'm here. This is my job. So looking at this as well, sell orders. Imagine all these people looking to panic and sell. All this would mean for me, if we dip into this zone here and we do break this level, this is now a crucial level that's broken before. Do apologize, the sirens. This is central London, a regular occurrence, unfortunately. South central London. So looking at this level here, breakout through here, crucial level. Breakout, sell orders, slam us down around $3,000 to $4,000, start consolidating, and boom, the rocket ship begins to $24,000, $26,000 and $30,000. Let me just mark that up over here because it's very possible at this point in time. We cannot disregard this. All I know is magnificent action over here right now. So looking at these levels overall, I'm hoping you're starting to see an overall picture of why I am believing these situations can be unfolding. They're very logical. I'm not talking insanity. I'm not making up levels. I'm showing you the exact regions here. Look at this daily candle straight to this zone here. So in terms of pullbacks, here's what I was looking at as well. What was it? I think it was on the 4 hour. I was trying to find this. There was a critical. Oh, there we go. So looking at this level here, I never really look at these because they're never valid on BTC. But what we had here was a trendline break. So let's just say before we actually rock it, if it does take, so theoretically, if we go off the theory that July could kickstart the huge slump or a dump of some sort, because again, it's unsustainable. There's nothing back in this right now. So a lot of players will be looking to dump. And as these short positions start increasing over time, the more I look at this level here, crucial. But let's just say we start holding from around 13.6 to 14, then all we'll be doing around this region is looking at this level here as a region of interest. So looking at some pullbacks, let's just say we pull up to around here. We're looking at around $12,000 and pushing down. I think I gave the exact levels in the Telegram. Let me just have a look. 11,600 is my region of interest for any pullbacks with the possibility to extend to 11,250. So let's just go back to the Brave browser. So around 11.6 to 11.250, we will leave that around there, around 11.5. Pushing this up to there, it still makes pretty good sense. We're looking at some trendline retests. It could pull back. Now let's just say we start hitting this level, then by all means, this is getting even more exciting. If we use that to align that up there, looking at around 14,240 pullbacks, reject this level and rocket us higher, please, Mr. Market or Mr. Satoshi, if you are behind this magnificent movement. So overall, hopefully you can see now, it's all starting to make perfect sense. It's really unfolding the euphoria, and my goodness, I've never seen a movement like this in my life. We are literally $150 away from our first upside, well, next upside target before looking to breach these levels. So even if this fib doesn't come into play, just be cautious of this on the 4 hour. Huge region broken through, not retested, could easily slam down, wipe a quick $2,000 to $3,000 off the price of BTC before gearing up for the next leg towards 16,400, which could be a major turning point in this beloved market of ours. So putting that into consideration, everything here is looking perfect, absolutely perfect. I do apologize, to be honest, that I didn't spot this earlier in advance. I was a bit fixated on this region here, using the fib from there to there. But now that I look at it, guys, drawing this up to here with the alignments, for example. Let's just make that whatever. It doesn't have to be perfect, so you get the gist. Looking at this now, when you actually extend this from wick to wick, the existence actually aligns up of this 61.8 around this level anyway, so we should be even dipping up to 14k in the worst case scenario. So let's just see this level, and all we could really imagine is, even if we do not break all-time highs by the end of the year and we do not see a pullback all the way down to these regions here, what you could be looking at, first of all, now we have this movement, we need to start plotting. Huge trend line over there. Let me just draw this as accurately as possible. We'll start it off from there actually, from wick to wick, and then just drag that down to there from that wick there, and then we will extend this out further. So looking at this now, you actually have a very crucial region, and again, look at that $6,000 region. Look where it lines up with the trend line. February, December, all around this zone here. Boom, boom, market begins rocketing. And then what this, I believe, will do, will start creating a staple for the market to have a huge major trend line. Just as you see with the stock market, for example, any of the indexes, this will slowly create a staple of moving higher and higher over time. And the crypto market will just continuously progress smoothly as we eventually gain more liquidity. And eventually, in a matter of years, I do believe we will gain so much liquidity, we will start trading a bit more stable and slowly stabilize, a bit like the stock market and a bit like the Forex market. So we have to really weave out over time how it's going to work out. But again, I'm hoping this is, I really just sat down and thought about this for a second, because as I'm looking at this market movement, I'm trying to figure out, is there any way I can see any potential turning points? Is there any way I can see what this market might do to surprise us? And I thought, instead of trying to catch tops and bottoms and trying to do anything magnificent, let's just let the levels do the talking. Let's focus on these upside targets. Let's see how they react. Let's understand that any of this can possibly happen. No one's here to catch anything mad. I'm making more than enough. I'm very happy that the market's doing this, but you have to be rational at every single point in time. So my goodness, look at this thing here. So hoping this has provided a lot more clarity in terms of Wizard Wednesdays. I wanted to go into a lot more depth, explain everything that's on my mind, explain what we are looking at in terms of long-term growth. Guys, just because I'm saying it might fall here or it might fall to 3,000 or 1,000, whatever may happen, look at the upside targets. Focus on the bigger picture. Do not take away from the longevity of this market. If you are new here and you might be a bit emotional, there is a lot of emotions you are seeing now. People cannot stand the thought. They cannot comprehend that even a pullback of $4,000 could happen again. People are saying we'll never see 10 again. Please do not think like that. You have to be open to everything, because it will destroy you. I've seen this happen in 2017, and I just need to basically entwine it in people's heads that this really can happen and it's very real. But then, so what if this happens? Look at where we're going. Look at where we are heading. Look at these Fibonacci's. These Fibonacci's have been fulfilling themselves with absolute pleasure. So look, 20,000 again, 24.5. Worst case, you tap up here, pull back. We are looking at 30,000, progressing to 50,000. These are psychological levels. Now, although they may seem like absolute rubbish because they're in the news and the media keeps covering it at the moment, these levels are being mentioned so much. $100,000, $50,000. They are becoming new regions of psychological resistance that do not even exist yet. So when price starts driving up higher, we've heard 50k so much from 30,000 and 20,000 that price will naturally reverse from these regions, because people will be thinking, when we hit $50,000, all you'll be thinking is, shit, I read that news article that said $50,000. I need to sell now. And that is what happens. It becomes psychological. That is how psychological support and resistance works. So looking at this now, we are $100 away from our targets. Looking to potentially push now, especially where the wick fishing region is. We could be looking, ladies and gentlemen, around an extra spike here of around 14,340. And then from there, this would correlate very nicely with that little surge we just saw. Let's go back to the 4 hour again. Where was that again? About from there. Could do it from there realistically as well, but this was the retest. So caught that little short position. That was nice. Closed it out in profit. As I said, it could potentially just be a final test to retest that ground. It was. We broke through, retested, boom. Right there now, less than $100 to our first target. So looking at this push, we're looking at this fib here. I believe that will breach a little bit higher and actually potentially extend. Maybe not that high, that's pushing it a little bit, but looking at around these regions here, just look and be careful. We're on the way to our targets. I'll get this uploaded as much as possible. And my final pointer here was removing this now, keeping this all steadily and nice and clean. Get rid of these fibs for 1 second. Let's just say we do drag it up to around 16.5. Then we could be pushing to around that wick there. So let's actually just drag it up to that wick. lines up very nicely with 16,500. So I'm going to say 14. Should we actually just do a live? Yeah, let's just do this. Why not? Live Telegram update. Guys, I do apologize if you're here, but we could be looking to an extension of around 14,350. Now you're seeing it live in the flesh how it works. And as you can see, I cannot type. It's a bit hard when there's a microphone in front of me. What should we say? Upside extensions. Looking to be extended towards 14. What was it again? We're looking at around 14 up to 4.4. Let's just do a nice safe region. So dipping back again. This is good, by the way, guys, just so I can show you this live in the flesh as it's happening as well. When you see a key level like this, you see about 13,600, exactly where the Fibonacci region is. When you see price begin pulling back, just as you've seen here, it creates a huge room and a huge wick region. So I know we've got 4 hours left, but let's check the 1 hour. My God, that looks magnificent. So this wick here was a crucial region for me. We broke through, we've retested. We should be blowing through the absolute roof. So let's just go back to the Telegram as well. A bit of live analysis and a bit of a Telegram update. We should be able to see this extension to 14.4. Be on the lookout. It's always good to be cautious and be on the lookout. Did I write? I write eyes. Knew it. Absolutely knew it. There we go. So, going back to the charts. One final thing I wanted to show you. So now we're seeing this in live action as well. You've just seen me absolutely butcher a simple sentence in the Telegram. Let's move forward and look at this now. So this should just ping. Looking at around 14.4. Absolutely beautiful. I feel like a football commentator. And as you can tell, I'm in a very good mood looking at this lovely market right now. So looking at this level here, let's just say theoretically around where this trend line actually begins, or even down there, what you're looking at, let's just say from around there, we'll start it off here and start adjusting. Boom. So going over to the monthly, we fell just short, and then once I drag this down to there, I think it was, no, it was the body, that's the one, my apologies. So dragging that down to the body over there, and then dragging this back to, this was the fib I was looking at earlier, so dragging this down to there. So what you're looking at from the point of where the trend line actually begins, the trend here, if we go here, realistically we actually have a major fib in play right now anyway, but if you notice where it aligns up with, it's my goodness, look at that precision. We are looking at around $17,300 there. So as you can see, this is why I always provide extended targets, because there's always those extra confluences that really come into play before seeing crucial turning points in the market. And to be honest with you, I just feel the closer it gets to all-time highs, the larger it will dump, because it will really just instill that euphoria into people, and they'll be like, oh my God, we're there, bang. So let's keep level-headed for now and just pay attention to the fact that the 78.6 Fibonacci came through with absolute perfection, with a little bit of a spike, give or take, by around $500 at the bottom. We held that region and we're now rocketing towards this Fibonacci here. Maybe, now that we're looking at this a bit more clever, let's just look at this. Worst case scenario, we do break through by the end of the year. What is a realistic end of year target? Here we have $22,000. So looking forward to how this plays out, to be honest with you. And for now, let's just focus on BTC, because for all coins right now, they are lagging a little bit behind. But I do believe once BTC, they will remain this way, because all these profits, everyone's missed the train for the people that were holding orts. So they're shifting their orts over to BTC. That's why you're seeing stabilization in prices. It's slowly but surely inclining higher, but people just want BTC right now. They're buying it like hotcakes. So looking at some extensions here, theoretically, actually, any form of a large trappy spike, just pay attention to the likes of $22,000, give or take, 28 to 22. 22 seems realistic if you start breaching that region. And that's what I'm saying. So looking at a break above all-time highs here, simple tap down to this zone here, pull up, you start rejecting these regions and breaking through the absolute roof. But as I said, look at this chart on the monthly right now, not a single pullback. the market will come back to humble people very quickly. You cannot expect it to just mimic this and just keep going. This is my point here. You cannot expect it to just keep doing this and then doing this and then doing this, because when you do see a pullback before the market actually begins reversing, let's have an actual look from the high down to the first initial pullback we saw. If we would see a pullback like that now, we would be at zero. This is what I'm trying to say. So the higher it climbs, the higher it could fall. If it goes back to all-time highs, bang. Where does that line up? Ironically, straight at $6,000, as it did there. Obviously it would, because that was the actual move. Realistically, you start pushing high, you start breaking that fib, you're still looking at $8,000. So you have to be very, very sensible in how this market plays out and understand that it will come back to humble you at some point. But in the meantime, these profits are absolutely magnificent, and we cannot take them with a pinch of salt. So take all these regions into consideration, and then from there, you'll be seeing very shortly after this has been posted in the Telegram, what I've been rambling on about and why I just posted that message in the Telegram. As long as it took me, you will understand why. So I'm hoping this has been a bit more of a deeper outlook into what is going on in this market right now, why we have to be very cautious still. I do not care how far we go. We have to start realizing that the market could be doing a bit of a magnificent move very soon. So guys, that is it for this Wizard Wednesdays. I hope you've enjoyed it. And as always, I'll be back in the Telegram with even more updates straight after this anyway.